All right, everybody, and one more time, thank you for being with us today. It's another week, and we're here again with my good friend Andy Gagliano from Gagliano Mortgages. Andy, how well you doing today?
Hey, Tony, I'm doing very well today. How about you, sir?
I'm doing fantastic, especially because I don't know if you've been outside. It's been hot, but it's not being as humid as I thought it was going to be, or as humid as has been on the past couple days. And I hope it stayed that way.
Yeah, I will say when I went out today, it was pretty brutal. The humidity was pretty bad.
Yeah.
So, yeah, I don't know. Uh, Maybe October, November will get here soon.
Oh, yeah, I hope so. I got some plans, some travel to do during those months. So uh, I hope they come soon. Definitely, most definitely.
Yeah,
But
yeah.
here we are, end of the month. July just went in a blink of an eye. I really didn't know what happened this month, to be honest with you. Had a couple deals that didn't go through.
Mm,
Uh, it's part of the business, and
it
it's
is.
for the benefit of my clients. So that's a good thing. And I have another one that I was able to rescue, and we're going to talk about it in a little bit. But I want to ask you, Andy, uh, the feds got together this week,
Yeah,
and the results weren't what everybody was expecting or wanted to hear, and it's about the interest rates. It still surprised me, Andy, that professionals, real estate professionals, is still talking about the Feds not reducing interest rates as a direct, as it has something to do directly with the mortgage rates,
right.
which it doesn't.
Yeah,
No, it
yeah.
really doesn't. It might affect, yeah, but does it have anything to do with the interest rate on the mortgage change? Like, people
Yeah.
still don't get that. So, can you kind of like enlighten us again a little bit about that?
Yeah, and I saw an article, and I didn't read it, but I saw the headline for an article today where Jerome Powell, the Fed chairman, he's been getting grief from Trump about
Yeah.
lowering rates, lowering rates, lowering rates. And Powell says, hey, when it is time to lower rates, we'll lower rates. When it looks like the job market is starting to soften a little bit, we'll lower rates. When it looks like inflation is going to stay low, we'll lower rates. And President Trump has talked a lot about how if Powell would lower rates and the Fed would lower rates, it would help the real estate market. He's not wrong when he says that because of what you just said. There's so many people out there, so many consumers out there who think that the Federal Reserve controls mortgage rates. And so when they hear that the Federal Reserve lowered rates, they're going to think mortgage rates are lower. And we get those calls all the time when the Fed lowers rates. Someone will call and they'll say, hey, I heard rates are lower today. What are they? What are they? How much did they go down? Well, I never say how much they went down because most of the time they don't really go down when the Fed lowers rates. So I just tell them what rates are currently. And, that's not being deceitful. It's just stating what the truth is. The rate is this.
Exactly.
Does it matter to you as a consumer if rates went down to that or went up to that? Rates are that. And so it doesn't matter how we got there because that's in the past and we can't go back to it. So, with all of that being said, I mentioned that about Trump because he's got a deep, deep set of roots in real estate. He knows how that gig works. Now, the Fed rates do directly affect commercial real estate rates.
Yes.
And so, but that's different than the residential market. And so it's the residential mortgage rates are controlled by a free market, and that is the bond market. In fact, they're controlled by what we in the industry we have an acronym for everything. We call it MBS. That is mortgage-backed securities.
Yeah.
And without getting too deep into the weeds, what a mortgage-backed security is basically a pool of mortgages that are within a certain interest rate range. And those, it might be $100 million, $200 million worth of mortgages that are pooled together. They're all within a certain rate range. They're all within a certain credit score range. And those pools are tied to bonds. And those bonds are traded in a market. It's the MBS market. And as the bond traders buy those bonds, that makes the demand for those bonds go up, which makes the prices of the bonds go up. And because that means they're in more high demand, it makes the interest rates lower on those bonds. And mortgage lenders then can offer mortgages at lower rates. As the traders sell those bonds, the opposite happens. As they sell them, that's less demand, more supply. The prices go down and the rates or the yields go up on those bonds. And that is when our mortgage rates go up. And so that's how the mortgages are priced, how mortgage rates are priced. And I will say this, we've talked about it a fair amount in our videos. The public wants interest rates lower. That makes perfectly good sense. We all want the lowest rate we can get on anything and everything, which I find interesting because we don't necessarily shop a whole lot for credit cards to get the lowest rate on credit cards. We just get whichever one comes in the mail, and that's when we charge up and get a $25,000 balance on to carry a balance every month. But
yeah, I know somebody right now who's paying 34% on the credit card.
it is insane right now. And that same person probably will balk at a 7% interest rate on a 30-year mortgage when you look at a long history of mortgage rates, that's right in there in the average range. But it is, so we all want the lowest rate. There's no doubt about that. But in the meantime, while we're waiting to try to time rates to drop, to go lower, to be lower, home prices are going up. Homeowners insurance rates are going up. Property tax rates are going up. Everything is going up. And it's just making things more cost prohibitive for buyers to buy homes when all that happens. So because people wait to buy, thinking that they're going to time the market the right way, they're actually doing themselves more harm, and they may eventually end up pricing themselves out of the market altogether. And that's a bad place to be. It's not where anyone wants to be if they want to be a homeowner. So, I can just say this. The rates are going to go up. The rates are going to go down. No one knows when they're going to go up or by how much, when they're going to go down or by how much.
Correct.
All you can do is you can focus on today. and you can buy today at today's rates. And then when the opportunity arises, and at some point in time, it will arise. When that opportunity comes up to refinance your rate to a lower rate, you need to be ready financially, which means you still need to have a job. You still need to have good credit. You don't need to have that $25,000 balance carried over on your credit cards. And you need to keep your house up in good repair.
Mm-hmm.
And you should be able to refinance your home and get that rate lower. Then if by some strange, very strange and highly unlikely means the rates get back down to that 3% range that we were at in 2020 and 2021, guess who's going to be in a great position to refinance and take advantage of that low rate? But in the meantime, don't get priced out of the market. Don't get elbowed out of the market by competition, because the longer you wait, and if rates do drop, that just means that there's going to be more buyers in the market. You're going to have more competition to buy that home that you fall in love with, and those prices are going to continue to go up. So
that is right. And that's what, all this time on the past videos, I keep telling people, buy on today's price. Because if the rates go down, price is going to go up, competition is going to be a lot. And chances are that unless you're willing to give up everything, you're not going to get the house.
Right.
And when I mean everything, that means inspections as well.
Oh, yeah. Yeah. And for those who are watching this who are potential or prospective first-time home buyers, and you're not familiar with what went on in 2020 and 2021 when rates were so low, that is exactly what happened. Buyers had to give up their right to inspect homes. Buyers had to put clauses in their contract to say, if I put an offer on a house and Tony puts an offer on a house, and Tony's offer is higher than mine, then my offer price automatically goes to be $1 or $100 or $1,000 more than his. Well, what if Tony has the same clause in his? Then automatically our prices keep doing this until we reach that maximum limit. So what just happened? One of us just paid more for a home than we would have paid 6 months earlier when the competition wasn't so strict or so stringent. So
that is correct. We have those escalation clauses during 2020, 2021, even in 2022, still were, pretty good escalation clauses over there. And you actually end up paying more for something that really, in some places I saw they were paying almost $50,000, almost $75,000 over asking price. So that's overpriced. That's a lot of money that you were paying on a piece of property that it didn't even appraise, or probably it wouldn't have appraised because people were waiving the appraisals as well.
Right. Yeah. Another interesting thing that happened during that time, this is just I think you and I could probably do this whole video on this topic because it's such a great learning experience for people. But another thing that happened during that point in time, or that period of time, is because competition was so intense for homes when they would go on the market, people who had to have a mortgage to purchase a home were losing to cash offers. So if you, a prospective buyer, don't have the ability to pay cash for a home and you have to get a mortgage, and you're trying to wait for the rates to come down and competition gets stiff again, you're going to run that risk of getting beat out.
Yeah.
And I know you did too, Tony. I had it happen. I had buyers who 20, 25 offers on homes is what they made before they finally got one accepted. And then I had buyers that would put that many offers on homes and just step back, throw their hands up and say, you know what? I'm just going to rent. I can't deal with this anymore.
Exactly.
Can't
I,
deal with it anymore. I'm just going to
I,
go rent.
I run with the same situation. I have a couple buyers that, they got tired. They didn't have the cash money. They didn't have the credit to be able to raise the mortgage. It was too many factors, and they just literally give up
Mm-hmm.
on buying a home during those days, and they have to wait until the things cool down and everything. And many of them, because I'm still in contact with them, we bought a home, and they're saying, you know what, Tony, yes, I'm not paying 2.5, I'm not paying 3% interest rate, but I do have peace of mind, and I do have the house I like and the house I wanted, and there is no stress, and it doesn't hurt my pocket because I'm able to do my mortgage payment.
Right.
And that's what is more important. And not only that, Andy, like I mentioned, many of these people, they give up inspections, appraisals, and we have a situation today. uh, Put them an offer on a property, one of my clients, and they're buying cash, and we
Mm-hmm.
talk about this in the past also, and we've been delaying a little bit. We had to do the septic tank inspection. Always do an inspection. You know what? At the beginning, my buyer was like, "But I'm gonna have to spend." I think this one was $1,000, 1,000 gallon, and the inspection was $575 plus the
Okay.
property inspection, another 400. It's $1,000 already just an inspection that he's paying, and in case he doesn't buy the property, he's not gonna get the money back.
Mm-hmm.
But what he's gonna get is peace of mind and the satisfaction to know that he didn't buy a junk. So we wanted to do the septic inspection, and somebody had the bright idea. And this is not the first time. And talking to the septic tank guy, he said, "Oh, this is more often than not. Somebody built a deck on top of the septic tank. So the deck needs to be removed in order for these guys to dig and lift the lids and be able
Yeah.
to inspect it." So we went back and forth with the owner. It's a company who owns the property, one of those companies out there. And they agreed. They sent their crew, remove the deck.
Oh,
They didn't remove it properly. They have to go back again. They have to go twice to make sure it was done properly. And not only that, I requested to be notified when that was going to happen so I can go over there and make sure they really do a good job. My clients is an elderly couple, retire. So,
mm-hmm.
I'm going the extra mile for them. I just thinking, if that was my dad and my mom buying something, I wish somebody will help them,
Right.
so
Yeah.
expecting that. So I went, they removed, they didn't do the good job. They never called me to go and make sure it was done properly. So I'm not an inspector or anything like that, but I was there when the septic tank guy, he even marked with orange paint where needed to be removed, what needs to be done. But anyway, we were able to do the inspection today, and everything was looking fine. Everything was good, getting cleaned, pumping that thing out and everything. And then all of a sudden, he just looked at me, and when he looked at me, I knew, and I said, "Don't talk to me." This is 10 o'clock in the morning. We're outside today. And I'm like, "Don't talk to me. I got the sun on top of me. Don't talk to me." So the tank is cracked.
Mm,
So it needs to be the cement part, actually the box needs to be removed. We need a new one.
yeah.
Simple as that. So the inspection didn't pass. Uh, a little bit disappointed for my clients because they really want the house. Is literally a minute away from their kids' home. They want to
Oh,
be
wow.
close
Yeah.
to kids.
Yeah.
What I did is like, I took the pictures, give me the report. Let's put the dirt back and everything, leave the deck, don't worry about it. And I talked to my clients and I said, this is a cash offer. Let us for a $10,000 price reduction from the offer that we make,
Mm-hmm.
right? And the only reason we're doing the reduction, the price reduction, is because it's cash. It makes sense. I know how much it's going to cost to replace the tank, and I know how much it's going to cost to put the deck back. And actually, we're not going to put the deck back on top of the tank. So I already got the numbers, I got the estimates, and it make more sense on that. It will have been probably something different if they will have a mortgage in it, because as you and I discussed, as you explained before, right? If we ask for a price reduction, it really doesn't help the buyer that much, correct?
It, yeah, and it can hurt the neighbors.
Exactly. It can hurt the price in the neighborhood and everything. We can ask they have a mortgage, we can ask for concession. We can ask even for the seller to pay for replacing the septic tank and all that.
Right.
So I sent, this happened this is a period of 3 hours. So I prepare all the addendum, the amendments and everything. We supposed to close today, but we extended for next week. Now we have this septic tank situation and everything. They agree in reducing the $10,000 price. I was
Nice.
able to negotiate that with them. Call my buyers already. They're happy. We're moving on. We're closing next Tuesday.
Very good.
If we were in the situation like 2020, 2021, this wouldn't have happened.
Right.
The seller will have say, no, thank you. Next, I have 25 other offers ready to come in.
Yeah.
And,
Yeah.
and I'm happy and satisfied about it. I'm happy for my clients at this moment. And this is related to what we've been talking. Know what you want to do. If you're buying a house with a mortgage, a price reduction is not necessarily a good thing for a buyer. And
Right.
right now, the way the market is, and I was talking to some people from Vegas and Phoenix, they're seeing more sellers concessions than price reduction. That's why we're not seeing those prices coming down crazy. There is no bubble.
Yeah.
It's not going to happen. There's nothing to burst. Prices are not going up crazy like before. So we are stabilizing the market, and that's a great thing.
Yes.
Definitely, it's a great thing. So if you are able to buy a house today, and I'm gonna keep saying this, and you're probably gonna be, you know, done with me hearing it and say, Tony, stop it, please. Buy at today's price. If that's not gonna hurt your pocket, buy it today. And when? Because they're gonna be coming down eventually. Now, like Andy said, we don't know if it's gonna come down all the way back to 2.5, 3%. But if we get at least a 1% reduction from what your interest rate is, it is worth it to call Andy and ask him, Andy, can I refinance?
That's exactly right.
So that's the good news. That's what's going on right now. And I think the market, is getting there. It's leaning towards a little bit to the buyer when it comes to concessions, not price reduction. I don't think it's going to be a lot of price reductions like crazy.
Mm-hmm.
In this case, I believe because it's a company who owns the house, they really don't care. They know how much they want, and we offer them asking price because they wanted the house. So in this particular deal, to me, the way I see it is a win-win situation.
Yes. Yeah, it sounds like it.
So anything else you want to add today, Andy?
I don't think so. We this is something you and I talk about a good bit, and I think that if someone's just catching this and this is their first video, I think there's some great information here. And I'll close with this. If you're thinking about buying and this is going to be your first purchase, or you're thinking about selling your current home and moving up or moving down, just have a real heart to heart with yourself and your spouse, or your spouse, I should say, and just if you're using the rates as an excuse to put things off, just stop it. Just stop it and just go do it. And I think I'll end and close things out on that.
Yeah, perfect. I agree with you. I think that's all we have for this week, people. And Andy, if somebody wants to get qualified for a mortgage, how can they reach you?
Yeah, so I can be reached at 205-979-4412. I'm at extension 1. How about you?
Well, after they talk to you and you give me the green light, we're going to start looking for a house and we're going to make sure we get you in the house. You can reach me at 205-370-3248. So this is all for this week, people. Andy, once again, thank you for being with us this week, and I hope to see you next time.
Thank you, Tony. Have a great day.
Bye-bye.
All right.